to Commercial Property Club podcast. We are here again. 2024 is going to be a wonderful year, and we sort of like rolled out a wonderful series, what we call the Master Series 2024. We're talking about bringing upon the show masters in the game, masters in the niche of multifamily apartment investors. We're talking about people that have done it for several years, people that have wealth of knowledge, experience. We're talking about masters. When I say masters, I talk about people that are experts in this particular niche. And this year, we're bringing them on board. We're talking about property brokerage. We're talking about lenders. We're talking about title insurance masters. We're talking about masters in the aspect of brokerage of apartment building. And today, I am privileged enough to bring one of the best in the industry, one of the experts out there that I call master guest today. His name is Jon Krebbs. Jon is Jonathan, actually, but he calls himself Jon. So we'll be diving deep today. Jon is the managing partner, one of the managing partners of the multifamily group here in the Texas area. I will go a little bit into his biography a little bit, talking about somebody that we call an expert today. Before forming the multifamily group, Jon was an executive director of investment sales with Perry Van Nessa. We call them the SVN brokerage, actually. Finished as the company's 22nd highest performing broker out of over 1,100 brokers nationwide in 2016. Talk about a colored. You can't really hide much of what you're capable of doing, I would say there. Before that, he was a top producer at the Henry S. Miller Company in the Dallas area. Jon specializes in asset valuation, coordinates marketing processes and property tours, contract negotiation when it comes to multifamily property sales. His analysis is very careful, finding creative ways of value add when it comes to multifamily property. Even throughout the sales, throughout the cycle of multifamily, this person I'm talking about is a master. He's done it, been there, done that, analyzed a lot of deals out there for his clients as a broker. Well, when he's not doing multifamily, he's certainly spending time with family also too. Jon is married to his wife Stacy and their children also too. Bradley, Jackson, Finley. They're doing pretty good. Jon has a BA in finance and has a MBA also too from the University of Texas here. Also lectures in the business school of Rose College of Business. So I would, without no further doubt, I would bring upon us today, Jon Krebbs. That's the man I'm bringing upon us today. So, Jon, you're welcome to my show today, Commercial Property Club podcast. We're talking about the Master Series 2024. You happen to be the first guest today on my show. Isn't that amazing?
It really is. And to celebrate the Masters, I'm actually here at Augusta National.
Oh, really?
Georgia. No, not really. No, this is actually the Masters are going on right now there, but I'm over at Tennyson Park in East Dallas. Wished I was competing in the Masters, but this will be similar today.
Yes.
Just one correction on your introduction. I appreciate that. That was really well done. I didn't go to the University of Texas. They actually politely asked me to find somewhere else to go after about 3 years. So I graduated from Texas Tech University. Just to make that
correction. Apology. I think that's me right there. That's to Texas Tech University.
Yes. So yeah, I'm happy to be here and excited to talk about multifamily apartments I'm based in Dallas, but we work all the way up from Tulsa over to Little Rock, over to Albuquerque, and down to South Texas. So a pretty big geographical area.
Yeah, absolutely. I needed to allude to that actually concerning the multifamily groups. The commercial real estate brokerage that Jon runs, they focus exclusively on clients and help them market and sell acquired multifamily housing based in the Dallas and also the Texas area, just like he said, it talked about right now, because they have a national influence. So their professionalism spans a lot of leveraging capital market knowledge, the entire market of Texas, also to their vast knowledge when it comes to brokerage, and they're result oriented also too. So the multifamily group is actually an influential brokerage in the Texas area. So thank you for joining us today. Like I said, in the Master Series, it's just such a wonderful privilege to have you on our show today. And big deal for me for bringing you on board today. And the topic we'll be talking about today is a big topic that investors are quite interested in knowing from an influential brokerage like yours. You've been the edge man down there, the lead man down there. The current state of apartment investments and market trend in the Dallas area. That's the topic we're talking about today. We all know of how the market has been for these numbers of years in the Dallas area. So we want to know from you today what that is all about. I'll be asking you a few questions in that light. But first of all, I know you talked about a bit of your experience before you started the multifamily group. How did you start? What influenced you starting a brokerage business, Jon?
What influenced me? Well, really that book, Rich Dad, Poor Dad. I read that when I was about 18, that first semester that I spent at UT, and knew then I wanted to try and make a living in real estate, and and try to acquire assets that could sustain a nice lifestyle. So I thought it would happen faster than it has. I'm about to be 40 this summer, and I've had this real estate brokerage for 6 years, been in Dallas for about 10, been in the real estate business now for about 18 years. And it's just, it takes time, I think, to build it up. But now we've got about 15 agents and 5 staff, and we've got a great team here. And we can jump right into the Dallas market if you like.
The first question I have is, how has the demand for apartment investment in the Dallas area evolved over the past few years, and what factors have influenced this change?
Yeah, well, I think it's been steadily my whole last 10 years. It's been the demand has been really high and getting more and more, and there's more education and there's more buyers, and that's led to more brokers and more sellers. And so it's grown and grown. And even, we shut down a little bit for COVID, a few months there where things were tricky, but it picked back up. And when interest rates went even lower, it just threw gasoline on the fire that was already burning pretty hot, and prices got really, really high, and activity was at an all-time high. I think our busiest year was 2021. And we had about 40 or 50 multifamily transactions that year. So that's one a week, one every work week. We were closing properties. Since interest rates started to tick up in April of 22, over the last 2 years, it slowed way down transaction wise. Last year was our worst year. We were down about 66% from where we were in 22. And this year, we're seeing that it's going to get better. There seems to be some price discovery that's happening. Some people are needing to sell. Some people are okay with selling. Some buyers are feeling a little more comfortable. So right now, the demand is, I would say, there's a lot of interested parties, but getting to a price that a seller is willing to accept is the challenge right now. A lot of buyers, but getting reasonable sellers for where the interest rates are and the headwinds of the expenses, insurance, taxes, is the challenge today.
It's just such been a tide of change over the last 2 years. I would agree with you. But investors will always find a way to adapt, actually. So what are some key market trends that investors should be aware of when considering apartment investment in Dallas, in the Dallas of today? What would you say?
I'd say, that it's now is probably the time to buy, but you're having to put in a little more equity, pay a little bit more in interest. There's less rent growth that's certain or that's on the horizon. So, I think people would like to buy when things are going well, but that's generally when the prices are the highest. Now that things are not too well, I think there's deals to be had, but the people that are going to take them on are taking on some risk with those things I mentioned. Okay. But they'll be good for that here in 2, 3, 4 years. I think the people that are buying now will do very well, whatever they buy.
Okay, absolutely. Like that's at the backside of things, and hopefully the tides of things turns, I guess. So now, looking at your listings, how do the rent rates and occupancy levels in the Dallas area compare to other major metropolitan areas? I mean, when you talk about places like Houston, San Antonio, maybe Austin, looking at those markets, what implications does this have for potential investors when you look at that?
I think the big Texas Triangle markets that you mentioned, Dallas, Austin, San Antonio, Houston, all of those are in a very similar place as a whole, which is that as you look down into the different submarkets, there's some that are oversupplied. I know Austin's seeing some negative rent growth in pockets. Same thing here in Dallas, concessions. There's always going to be, I think it's not, you can't, I mean, Houston is huge, right? Houston is so big to say that this is what's going on all over Houston is just too broad, right? Okay. So you have to get a little more local in the real estate and say, okay, what's happening in this particular submarket here? Are there jobs close by? Is there new supply coming online? How tight is the market? I was talking with an investor today that I sold a property to that we're probably going to list here in the next month or so, and that pocket there's no new supply, so the rents have been moving up even over this last year, and the occupancy is high because there's just nowhere else to really live around there. There's some competition, but there's not an overwhelming new supply. So kind of comes back to fundamentals of supply and demand. But you really, I think, have to get in to the even beyond the city level down into the sub-market level.
Okay. Yeah. So much more so to say within the spaces of about 3, 5, or 10 miles within the sub-markets, practically.
Right, because so many with interest rates so low back in 2021, 22, 2021, first part of 22, a lot of projects got kicked off. a lot of new developments been happening. Well, now those are all coming online, right? So the units being delivered. And so rent growth is pretty flat. I mean, a lot of the new supply, even though it's concentrated in certain submarkets, is driving down the overall rent growth for the whole metro, let's say. So, but what's going to happen is eventually that supply will be absorbed. And right now, I can tell you there's not a lot of new projects starting. Okay. And what's going to happen is that here in 2 or 3 years, you're going to have very little new supply, and you'll see rents start to pick up. And that's why I was talking about the people that are buying now are going to see some rent growth here in 2 or 3 years, because there won't be any new supply coming out of the ground, or very little, much less.
Awesome. You talk about submarkets in there. What specific neighborhoods or areas within the Dallas areas experiencing the most growth and demand for apartment developments? And why is that so right now?
I live and work in East Dallas, and I'm here at this golf course here in Dallas. And I've seen them build a ton over here, but development has its challenges now, because a lot of the easy sites have been developed, and the infill sites that are available are challenging. They're expensive, but there's a big one going up right now on Skillman. Or rather, I'm sorry, Live Oak. The site has been vacant my whole career, all 10 years I've been in Dallas, but now it's getting a concrete building. I don't know how many stories they're going up. They're already up to 6, 7 stories, and I don't know how high it's going to go. And it's multifamily. They're building a new high rise right on Monticello and 75. They just knocked down an older community. They're going to build another one across the street from that. So East Dallas, that's kind of more 75 corridor. And then I'm seeing a lot of development still in the Deep Ellum area, and right here downtown. I'm kind of focused on Dallas proper, and so that's where I see, a lot of new development is around the urban core.
Yeah, I see that to myself. When I drive downtown to see for some business meetings, I see that also to what you're talking about also too. Now, talking about, apartments per se, with the rise of remote work and changing lifestyle preferences that we have, after the inception of COVID, how is the composition of tenants in the Dallas apartment shifting? And how does these impact investment strategies when you want to look at the holistic things of things?
What we see in workforce housing is rents have gotten to close to being unaffordable, as people starting to double up, take on roommates, move in with family members. I was just now, and then the nicer, more luxury stuff in East Dallas. I was at a buddy's apartment yesterday, who lives in a nice new development, and they have all the nice amenities, the package lockers, cooled package lockers, all the security. And a lot of them are college students or young professionals, a lot of 1-bedrooms. They have balconies kind of looking out over downtown. It's pretty nice. But I think that the A-class folks that can afford it have a lot of options, because he was talking about his renewal and how, there's all this new stuff coming online around. And so there's some concessions to be got. Okay. Don't build much new C-class or B-class multifamily. So those rents can be a little tighter, like a little more growth, a little better occupancy. And so I see, as you mentioned, lifestyle changes of, people, basically doubling up, and then some of these concessions creep in, and then people move up, right? So you have somebody that move from a C to a B, and from a B to an A. So it does that does affect it as well.
We know what happened post COVID, actually, the pandemic, and also let's consider the economy fluctuations, such as the interest rate changes, uh, affecting the stability and the profitability of the of apartment investment in the Dallas area. What is that? What can you say as regards to that? You know.
Well, it's certainly wiped out a lot of equity. I mean, the Fed chairman has done his job in curbing spending, inflation, raising of rents. Me and my business partner are not spending a lot of money frivolously because our transactions are down. So there's less velocity with money in the market, and yeah. So and then when I say equity's been wiped out, it's because a lot of prices have come down, and the interest rates that were floating, those deals now are have negative leverage and are we've seen a lot of equity that's been reduced, some completely wiped out, but it's definitely put a slowdown on transactions. Pricing is down anywhere 15 to 20%. Across, I think, all the major metros. Now that was up from, it's probably gone up, 100% in the 10 years before that, or 150%. So
yeah,
turn it back down 20 is not that bad, but it still hurts for all the people that bought at that in 21, 22.
Now, when you look at that right now, the types of things, and you've underwritten a lot of deals. You've listed so much of the deals over those years, and obviously, you have some listing also too right now. This is my question: what are some innovative strategies or emerging trends that successful apartment investors in the Dallas area are leveraging to maximize return and mitigate the risk that you're talking about right now?
That's a great question that I should have some good answers to. I think one is water conservation.
Okay.
Done that on my own property. It's one of the first easy things I look at for people is, how much per unit per month are these apartments using in water? Because that's something that can be fixed. My business partner, Paul, is actually in the process of redoing his insurance with, instead of like a traditional multifamily insurance company, he's using State Farm. And he's actually been able to reduce his insurance costs by about $30,000 a year.
Oh, wow.
Which, yeah, you put that on a, 7 cap and you're, $425,000 worth of value that he's increased the property by lowering that expense. So tough times always lead to innovation. One thing that I've implemented is trying to retain tenants while giving them an increase in rent. But so let's say, if I can not have to do a make ready on a unit and save, $1,000 and get a little bit of a rent increase, I've been doing a good job for my cash position. And and I try and give them something like a new appliance, new ceiling fan, clean their carpet, show them that I'm investing the money in the property rather than just being a greedy landlord, letting the work orders pile up and continuing to raise the rents. But, renewing people by spending a little money to keep them, and then spending money to bring in a new tenant can be an effective way to control income and expenses a little bit.
In the current market that we have, which I think is not that competitive, or would I say is competitive, but what advice would you give to new or aspiring apartment investors looking to enter the Dallas market for the first time? Looking at the numbers of deal flow you have, then what you analyzing right now, what you're listing as a brokerage, what would that be advice that you'll give for new and aspiring investors right now?
If I was going to be a new investor, and what I'd like to see from investors is for them to see what properties are selling for, and then figure out what sort of metric, be it cap rate, price per unit, IRR, price per foot, just know what stuff is actually trading for. And that way, if your expectations for your returns are in line with the market. Because if they're going to have a tough time. And that is one way you can, on the front end, say, okay, if I'm looking for 8 caps or 7 caps, they're probably not in Dallas. I'm not going to be buying in Dallas Fort Worth,
Okay.
Because, right now we're a 5.5 to 6.5 cap market. Get familiar with the properties that are selling.
Over the years, you've listed tons of properties out there, and how is the deal for apartment investment in the Dallas area been affected? Looking at the current market trends, and what strategies are investors using to identify and secure lucrative opportunity in this competitive landscaping right now when you look at things?
We've had success over these last couple of years in just trading in smaller properties, 9, 12, 16, 20 units. I've got one under contract in East Dallas, 16 units, one on the market that's not units. I mean, I had a couple of bigger ones that fell out of contract because of equity issues or debt issues or capital needs. The bigger deals are just tougher to get done right now because, when, if prices went down 20%, a $40 million deal, might have lost $8 million, dollars worth of value, whereas a $4 million deal, lost 800. And so the dollar amount is so big. And a lot of these smaller deals are more, your private buyers, and kind of, which has always been really my bread and butter, working with private clients. Because right now there's just not a lot of inventory. We underwrite a ton of properties, but not a lot of them make sense.
Talking about, dealing with clients, your brokerage, what is it about the multifamily group that sets you apart, when it comes to, dealing with private ownership like that, carry us through your cycle of, building that relationship, then ultimately helping the investor, the owner of the property leased, and through the cycles, getting them to the closing table with buyers also too, so.
I've got actually a great example of that recently. So I got called by a company out of Florida to sell a resort property in East Texas. It was a Holiday Inn timeshare property.
Okay.
And, I was flattered that they reached out to my partner and I for us to sell it. And as I got it, and we ended up doing an auction through the Crexy website. Okay. But what I realized is, you asked what sort of sets us apart. And it is that, they could have hired a large national company, publicly traded. But there's going to be 4 or 5 guys on the team, guys and gals on the team. They're all going to get a small piece of the deal, and no one is really going to work it that hard. Or, they can hire me, who's, going to take the lion's share of the fee, and I have a lot of expenses, so I'm incentivized. And they're going to get a veteran broker like me, or I'd say, tenured broker that is going to work the deal for them, and we're in contract to close here in about a week. So they're getting, with hiring my firm, a boutique firm, they're getting me. And that's another thing I tell them all the time is, a lot of my competitors, they won't do the tours. I tell them I'll do the tours myself. I'll go out and sell the property itself. And
Okay.
that's a lot of them will send a junior guy or somebody on their team to go do the property tours. Well, I'll go out there and I'll sell it myself.
Great. You've had ways of dealing with clients over the years, also to talking about the way you walk, personally. Like I hear you right now, hands in deck. You're hands in deck with the people you help. What are the good questions investors should be asking you when they want to have you on their team? Because I believe you're only as good as your team when it comes to all those things, and the relationship is what matters. What are the questions investors should be asking you when it comes to you helping them, selling, being the seller broker, or however you want to, be there to help them?
For investors that are trying to buy, what you need to be saying is, do you have a debt quote on this? Who's looked at this to size the loan, to who we're going to work with on the debt? You have somebody I can work with on it. What about a good attorney? Some good attorneys that I could talk to. What about title companies? And having these conversations, asking the broker for recommendations. What about management companies?
Okay.
What about insurance? What about tax consulting? What about contractors? Getting those types of asking those questions is going to how the broker say, okay, yeah, this person's willing to be coachable. They're going to work with these, with some, and I'll give you 3 names. I'm not going to just give you one, but you go out and these are people that I know can get the job done and that I can on if you're telling me you're going to close this property. And then from a seller side, what I want to hear is, that I understand that, the market is not what it used to be, and don't want to price this so high that no one looks at it, right? We need to do it appropriately so we can actually get people engaged in the sales process and looking for ways to add value and trying to understand the deal and really engage. Just being like, oh my gosh, that's overpriced. I'm not gonna even underwrite it. It just from an eye test, it just sounds way too expensive.
Awesome. Jon, you've been such a great guest today. And ultimately, I always talk about the fact that when people are experts in the field, they deserve to be known. They deserve to be known for their work. And people should ultimately know how to get across to them and ultimately know how to secure the services. How do people get to you?
Yeah, just go to my website, multifamilygrp.com. And I'm right there. You can, you'll find my email and phone number and a lot of other folks on my team as well. And reach out if I can help you with anything. I'm certainly willing to try. I love to talk about real estate.
Awesome. Thank you, Jon, for joining us here on Commercial Property Club podcast. It's been wonderful having you on board. You've shared a ton of value today with my audience. And like I said, it's the Master Series. You're one of the great masters out there when it comes to property broker here in Texas and also nationally in the US. So thank you for joining us. We would love to have you some other time. We'll dive deep in some other aspect of property brokerage in the apartment sector. Thank you so much, Jon, for joining us.
Take care.
All right. You have a good one. Thank you.
Too.
Awesome. Well, as you can see, I had Jon here as my first Masters on the Master Series here 2024. And it's been such a wonderful time spending with Jon here on Commercial Property Club podcast. And it's another good episode. We'll have more masters come on board with us to share valuable aspect of various sectors and departments of commercial real estate. depending on asset classes. Today, we're talking about the apartment asset class, and one of the best experts out there was brought on board from the multifamily group here in Texas. So we would also have other masters come on board on the Master Series 2024. Thank you for joining me. I will see you some other time. Thank you so much. This is olaibiwoye of Commercial Property Club Podcast.